Saturday edition, April 19th. Quantum AI investors. We're looking at SPY right now. We closed Friday 526, so we're looking at a slight retracement here of a previous move. We're trying to get this gap fill at 560 or 555. We didn't get that gap fill yet. So we're kind of bouncing here. We want to see that 480 level hold as it did prior to that reaction low. So we want to see that really hold here. And it looks like so far so good. I think we're going through a period of consolidation, and perhaps in the coming weeks, I think we'll resolve to the upside. So there's a little bit of a thesis here that I have with these reaction lows and the Elliott wave pattern. I believe we're beginning the fifth wave, which is going to be a wave higher. Again, we don't know where this top lies in the fifth wave. Maybe we break out to new highs, or maybe we are somewhere in this zone, and then we roll over, and we retest this line for the final, the finale, to fill these gaps below, one at 420 and one at 440. So that's the end result in my analysis, though some people are calling for 300 on the S&P. I think we'll have to see that. I think it's unlikely we'll get 300, but maybe we'll get this 350 level in the S&P once we break these trend line, which we have not broken the trend line. So until then, we just stay the course and just keep on with the SPY. So let's take a look at GLD. So our thesis here was that there'd be some topping pattern. Indeed, there's a topping pattern happening in the GLD. We saw a big pop up, and we see that in my thesis here that it will roll over. That rollover coincides with the general market rollover. So once we see the general market rollover, which is basically when the S&P starts breaking that 480 level on that trend line, then we'll see GLD also take a hit, as well as all of the miners. So you have Peter Schiff peddling GDX and GDXJ. That's because his company owns that, right? I mean, it's always a great idea for him to buy gold, for you to buy gold, because he earns commissions on that. So just be careful who you're listening to here. But yes, gold has been a great play in GDXJ since March of last year. If you got in March, you're very lucky because it's double now in GDXJ. But now I think the move has kind of exhausted itself. We see this potential double top forming in the GDXJ, and we have some gaps below. So we want to watch this closely. I don't believe that I believe most of the move has been done, and now we have to be extremely careful at these levels, because we do see this kind of cup forming, long-term cup here, and I think we'll have a handle, which usually that handle will retrace to this level here, which is the top of this cup here. So I expect a retracement of this move to 64, back to around 44. We'll find support again, and we'll see what happens there. If it breaks there, it could certainly go down further into the 30s and fill that little gap down there at 33. So we want to just pay close attention to this. Does it break out? Does it not? Is this a real consolidation level? Are we going to break out of this cup and head higher, or are we going to just head lower and form a handle? So let's take a look at that more carefully in the coming weeks. And so yeah, the gold miners have underperformed for a very, very long time. It's the opinion of Peter Schiff that gold will outperform now, which I don't completely disagree in the long run, but I think it will market perform or market underperform as gold has done relative to the S&P. So if you look at the relative performance of the S&P versus the GLD, S&P has gone up further than the GLD over a long period of time due to dividends and interest and just the compounding nature of the S&P. So in the end, most people are just better off for tax reasons buying the S&P straight out and not playing in the minors or GLD or anything like that. So I do recommend that to most people that have a long-term time horizon. You just buy S&P and you just set it and forget it type of investing style, because in the long run the S&P will always rise. So that is just a fact over a long period of time. If you look at 20-year horizon, S&P always goes up. So and it's always a better investment than the gold is. So than the GLD. So yeah, that's kind of my thesis on this. So looking at TradingView. Now I wanted to look at also Yahoo Finance. I wanted to look at some market fundamentals that I've seen in the IWM. So I wanted to take a look at IWM, and I think that there is a rally coming in IWM and probably a broader market, but for my analysis, I'm just talking about IWM. So there are a couple of things here that would make me, kind of bullish on IWM as opposed to bearish, and those mainly center around kind of the lows that we've seen before in the MACD. And those have been great buying opportunities, like here in the MACD. That was in 2020 with COVID. Here in 2022, that was a great buying opportunity in 2022. And right now, we're just entering that phase of buying opportunity in the S&P and the IWM, which implies S&P. So I would say maybe it's got a little thrust down a little bit more. We're talking maybe right now it's -9. Maybe we can reach down to -11 here. So not much downside. But on the other side of that, we see that there's good upside, because once this hits this low here, 170, we saw it jump up to 240, so roughly a 50% gain. So I am anticipating another cycle here in the market where there's going to be a bull cycle in IWM, maybe another indices as well. This is specific to IWM right now. And we're seeing too, anytime we trade significantly below these moving averages, the 200-day, it's been a great buying opportunity. And we are starting to be significantly below the 200-day. I would say there's maybe a little bit more juice in the tank to go down a little bit, maybe even retest like 170 or even 165 on IWM. I could totally see us retesting that, say 165 area in IWM. But as far as a total collapse in IWM, I don't see it. I think that we're gonna head higher after we get this next low. So the next cycle is likely to be, some bottoming out process here. Maybe you get a few percentage points to the downside, and then it will resolve itself to higher. So I think overall, if you're looking at a 6 to 12 month time horizon, there's going to be a big pop in IWM that over this next time horizon. Although longer term, I think structurally speaking, if the economy does not pick up and improve soon, we're going to see that bear market. But I think a lot of shorts in the short term are going to get burned, thinking that this is the big one. But I think the big one is still a little bit ways off. Here we are sitting right in the cup and handle formation here For IWM, we have the cup and handle. We're sitting right here 186, which looks like pretty much our support area. I would not be surprised if we get a rally up to 200 or even further in the coming weeks. So I think this move has pretty much exhausted itself to the downside. I do expect small caps to recover as we're significantly below the 200-day. And I don't see the cataclysm in IWM that other people are calling for at this very second. Though something could change, who knows? But at this very moment, looks more like a buy than a sell because of the bottoming in the MACD. Again, this is all just advisory, but we haven't seen the MACD turn. Really, you'd want to see the MACD turn. It's not turned yet, so you're kind of buying into the abyss a little bit. But just keeping this as a on your watch list, this IWM, which means the small caps. Let's take a look at IBB. IBB is the biotechs. Looks like we got an ABC correction. Might be exhausting itself soon in the IBB. We just have to keep a close eye on that. It looks pretty far below the moving averages, which makes me a little bit more bullish on the IBB than bearish, because we only see a few instances since 2010 where we've traded significantly below the moving averages. So we've had this long period of consolidation here, and we moved down. I think the next move for IBB is probably to the upside once this ABC correction gets done. So we might see this come down a little further, maybe to here, 6 or something. So right now it's a 5, maybe we'll come down to 6 and start to bottom. So I think IBB looks pretty good too. BABA is another one we've been watching. Looks like we got the impending golden cross. It looks like it might happen in the coming weeks. Let's keep a very close eye on BABA. Keep a close eye in this golden cross area. I think we'll get it. I think it's going to resolve itself. We'll see this pop higher, and it's just a matter of time when we see this support zone, and this golden cross happen. So I think we keep that on our watch list. I think it's a great move in BABA will happen once maybe Trump makes a deal or something. Who knows what the news will be like in the coming weeks, but I do expect there's short-term oversold conditions here in the market, and I think that we're going to be resolving higher soon. There might be a little volatility more in the short term, so that's why, just be cautious out there. And same thing with SOXL. SOXL's hitting these support levels around 9/7, and we do see kind of a double top and ABC correction. Now, this correction could go deep or deeper than -8. We're already at -6. It could be like a -8 for SOXL, but really it's hitting these strong support levels around 7. So I am a buyer of SOXL around 7, I think, or 750, let's just say. I think we're hitting, if you can get this on the cheap, I think we're going to have a bull move, as I've noted in my trading view analysis. Every time we've hit this line here, we've had a bull, and I think we're going to have the next bull market in SOXL. Though, one could argue that this is a megaphone pattern and we want to see where it resolves. Doesn't look like the Elliott wave is too defined in here. Maybe we have a five pattern wave where we have this as being first one, second, perhaps this is the third, the fourth, and the fifth, and now we're going into an ABC correction where we have A, we come back up, we have the bull market, and then we resolve down, we break below. So let's take a look at this move in the coming, let's say 6 months. I think we're gonna have a bull market in SOXL for the next 6 months to a year, I'd say. So let's keep this on a very close watch. I think you could buy down here. Let's say if it breaks below and you get a chance to buy 8, you could put in a very tight stop to 7, because if it breaks below this line, we're headed much lower. So, if you buy it around here and you put a tight stop, maybe at 7 or something like that, the worst that you could do is lose a few pennies on your trade there, 50 cents a share or whatever. Versus you could be in for a double or triple if this bull market does materialize. So I think the risk reward is there for SOXL right now. I think we're going to have another bull market in the short term in SOXL, and then eventually, hit this resistance level of around 23, and then roll back over. That's my analysis for SOXL. So that's my updates for this weekend. I hope everybody has a great holiday weekend and for Easter. And as always, like, subscribe, and comment, and let the markets be with you. Take care and good night.